Think investing is just for Wall Street pros with fancy degrees? Think again. The truth is, you don't need a suit, a skyscraper office, or a finance degree to spot the next big thing. In fact, some of the best investment ideas are hiding in plain sight, right where you live, work, and shop. My best investment ideas didn't come from spreadsheets. They came from everyday life. Inspiration can strike while you're sipping coffee, running errands, or just chatting with friends about what's new and exciting. Walking through a shopping mall, you're surrounded by real-world data. What people are buying, which stores are buzzing, and what products are flying off the shelves. Talking to my family about what they love, I learn what's trending before it hits the headlines. Kids and teens are often the first to spot the next big brand or product, and their excitement can be a powerful clue. Noticing which stores are packed. These are powerful signals. A line out the door or a sold-out shelf tells you more than any analyst report ever could. The average person has a huge advantage. You see trends before the pros do. You're on the front lines experiencing what's hot and what's not, long before Wall Street catches on. Wall Street is often too busy with numbers to notice what's hot on Main Street. They're buried in data, but you're out there living it, seeing the changes as they happen. You know which brands are winning in your world. That's your secret weapon. When you see friends raving about a new store or everyone carrying the same shopping bag, you're witnessing a trend in real time. Forget the myth that investing is a members-only club. It's about owning great businesses you already know. If you love a product and see everyone else loving it too, that's a clue worth following. Your job isn't to be a financial genius, it's to be a sharp observer in your own life. Notice what's changing, what's catching on, and what people can't stop talking about. By paying attention, you can spot the next big winner long before the experts. Sometimes the best investment research is as simple as asking, what's everyone excited about? The path to a 10-bagger, a stock that goes up 10 times, can start with something as simple as a burrito. That's how legendary investors have found their biggest winners, by noticing what's popular before it becomes obvious. Your edge starts right where you shop. So next time you're out and about, keep your eyes open. You might just spot the next big thing before Wall Street does. Who am I to give you this advice? I'm Peter Lynch, and for over a decade, I had the privilege of managing one of the most successful mutual funds in history. My journey in the world of investing began with curiosity and a desire to understand how ordinary people could build extraordinary wealth. I ran the Fidelity Magellan Fund from 1977 to 1990, a period of dramatic change and opportunity in the financial markets. It was a time when the world of investing was opening up to more people than ever before. When I started, the fund had just $18 million under management, a modest sum by Wall Street standards, but full of potential. By the time I retired, that same fund had grown to over $14 billion, a transformation that surprised even the most seasoned professionals. We didn't just grow in size, we delivered results. We beat the market in 11 out of 13 years, averaging an astonishing 29.2% annual return. That kind of performance is rare, and it's a testament to a simple, disciplined approach. To put it in perspective, a $10,000 investment at the start had grown to over $280,000 by the end. That's the power of compounding and smart investing. My secret? I invested in companies I understood, often ones I encountered in daily life, like the stores I shopped at or the products I used at home. I believed that the best investment ideas were often hiding in plain sight. Taco Bell, Hanes, Dunkin' Donuts, these weren't Wall Street secrets. They were brands people interacted with every day, and that familiarity gave me an edge. Wall Street likes to make things complicated with endless jargon and complex models. But you don't need a PhD or a supercomputer to succeed as an investor. The individual investor actually has real advantages: patience, flexibility, and first-hand experience. You can spot trends before the experts simply by paying attention to the world around you. You don't need to predict the economy or outguess the headlines. Most experts can't do it consistently, and you don't have to try. What you do need is a willingness to do a little homework, to read annual reports, and to use your own common sense. Investing isn't about gambling, it's about making informed decisions. The stock market is a way to own great companies, not a casino. When you buy a stock, you're buying a piece of a real business with real products and real customers. Your experience as a consumer is your best tool. Trust what you know, stay curious, and remember, sometimes the best investment ideas are right in front of you. The golden rule: invest in what you know. You don't need to decode a company's tech, just understand how it makes money. What do they sell? Who buys it? Why do people choose them? Your personal experience is real research. If you love a product and see others do too, pay attention. I found the gap by visiting a store and seeing it packed with happy customers. You can do the same. Start with brands you use and trust. If you work in healthcare, you'll spot trends there. If you're a coder, you'll see the next big software. Stick to your circle of competence. There are thousands of stocks. You only need a few winners. Fill your portfolio with companies whose success you can see in your own life. Don't be intimidated by what you don't know. Focus on what you do. That's where your edge lies. Wall Street isn't first to spot every trend. Often, it's last. Analysts follow the herd and notice companies only after they're already popular. The real opportunity: spotting trends in your daily life before they hit the headlines. Think of energy drinks. Teens were drinking Monster long before analysts cared. Notice what's selling out, what people are buzzing about, what's everywhere you look. Listen at parties, watch what kids wear, see what tech your office adopts. These are the seeds of future 10-baggers. Professionals are often stuck with big, well-known companies. You can act on what you see first. The next time you spot a product taking off, ask, is this a public company? Is it growing? Your personal experience is the best research tool you have. Don't underestimate your ability to spot the next big thing. Stay curious and observant. Once you spot a promising company, test your understanding with the 3-minute story. Can you explain what the company does and why it'll succeed in plain language in under 3 minutes? If not, you probably shouldn't own the stock. Focus on 3 things. How does it make money? Who are its competitors? What's driving its growth? For example, Starbucks sells great coffee in comfy stores. People pay more for the experience. They're expanding fast and the brand is strong. If you can't tell a simple, convincing story, move on. This test keeps you honest and focused on what matters. Investing isn't about jargon, it's about understanding the business. If a 10-year-old can get it, you're on the right track. Keep it simple, clear, and logical. Now let's talk numbers, but just one, the PEG ratio. It's the only math you really need to check if a stock is fairly priced. PEG stands for price earnings to growth. It's PE ratio divided by earnings growth rate. A PEG of 1.0 means the price matches the growth. For low 1.0 ? That's a bargain. For example, a PE of 20 and growth of 20% gives a PEG of 1.0. If growth is 40%, PEG is 0.5. A great deal. If the PEG is much higher than 1.0, the stock is likely overpriced. The PEG ratio keeps you from overpaying for a great story. It's your reality check, balancing quality and price. Find a great story and a PEG below 1.0, and you're in the sweet spot. Don't get swept up by hype. Let the PEG guide you. It's simple, powerful, and protects your wallet. Use it every time. Let's put it all together with a quick example. Imagine you discover quick-built furniture, stylish, affordable, flat-pack furniture stores packed with customers. You try the product, love it, and see others do too. That's step 1. Know the company. Next, the story. Quick Build sells trendy, affordable furniture. They're beating old-school stores by appealing to young buyers and expanding fast. Simple, clear, and logical. Now check the PEG ratio. Say the PE is 20 and earnings are growing 25% a year. PEG is 0.8, below 1.0. That's a fair price for strong growth. You found a company you understand, a great story, and a reasonable price. This isn't rocket science. It's disciplined, common sense investing. I use this process for hundreds of winners at Magellan. Anyone can do it. Just follow the steps. The best ideas are often hiding in plain sight. Trust your own experience. Here's your simple roadmap to finding big winners in the stock market. If you've ever wondered how legendary investors spot those rare stocks that multiply tenfold, it all starts with a clear, repeatable process. Let's break it down into 3 practical steps that anyone can follow, no matter your experience level. Step 1. Find what you know. The best investment ideas often come from your own life. You don't need to be a Wall Street analyst to spot potential winners. Look for ideas in your daily routine, at the store, at work, or even at home. Notice which products you and people around you are excited about, or which services you can't live without. Make a list of products and services you love and use regularly. These are often the companies with loyal customers and real staying power. Don't overlook the obvious. Sometimes the best ideas are right in front of you. Step 2. Craft the story. Every great investment has a simple, compelling story behind it. Ask yourself, what makes this business special? Why will it keep growing, even as competitors try to catch up? Can you explain in plain language why it's a great business and why it'll grow? Use the 3-minute test. If you can't make your case in 3 minutes or less, you probably don't understand it well enough yet. If the story is weak, confusing, or full of holes, don't force it. Move on to the next idea. There are always more opportunities out there. Step 3. Check the PEG ratio. This simple number compares a company's price to its growth rate, helping you avoid overpaying for hype. Is the price fair for the growth you expect? A PEG ratio around 1.0 or less means you're paying a reasonable price for future growth. It's a quick way to spot bargains and avoid overpriced stocks. If the PEG is around 1.0 or less, you may have found a bargain. These are the opportunities that can deliver outsized returns over time. If it's much higher, be careful. You might be too late, or the market may be overly optimistic about the company's future. Don't chase what's already run up. These 3 steps turn you from a speculator into a real investor. Instead of gambling on tips or hype, you're building a process based on knowledge, logic, and discipline. Focus on what you know, keep it simple, and let the numbers keep you honest. This approach helps you avoid emotional decisions and stick to your plan. You don't need dozens of stocks, just a few great ones that you truly understand and believe in. Quality always beats quantity in the long run. Stick to this process, and you'll be ahead of most pros. Remember, patience and discipline are your greatest allies on the journey to finding your first 10-bagger. Finding a great company at a fair price is just the start. The real money comes from patience, letting your investment grow over years, not days. Don't sell just because a stock goes up or down. Check if the story still holds. If the company's still winning, hold on, even through rough patches. Discipline means sticking to your plan, not chasing every headline. Some of my biggest mistakes were selling winners too soon. Your homework. Make a list of 5 products or services you love and use often. See if those companies are public. If so, start the 3-step process. Explain the story to a friend. Then check the PEG ratio. Your edge is your everyday experience. Use it. The next 10-bagger could be in your shopping bag right now. Stay patient, stay curious, and trust your own eyes. That's how you beat Wall Street. If you found this helpful, don't forget to like, subscribe, and hit the bell for more investing tips.